Hello traders, welcome to SammybrainFx. So in today's video we are going to be doing a breakdown on volatility 10 index V10. Alright, so V10 is one of my favorite instruments that I trade in synthetic indices. I just love the pattern, I just love the way it moves, so it's one of my favorites. Alright, so now let's dive in. Okay, now looking at the chart before us, this is 4 hours time frame. So we have seen how we have marked out our zones, the trade that we have taken so far, and what we are still looking at currently. So let's go to our daily time frame. So if you come to our daily time frame, now looking at from our daily time frame perspective, we see that price has been on a downtrend. Looking at all these, price has been going down. But when we got to this particular area, when we got to this area, we saw that there was a break of structure to the outside. So this previous high was taken by this new high. So there was a break of structure, this new high was created. So this is the zone that triggered that break of structure, which is this particular zone. Okay, all right. So if we go to our 4 hours time frame, now coming down to our 4 hours time frame, so what did we see? We saw how price was playing out, how all these lows were taken by this particular low. And then that break of structure we saw on the daily time frame, we can see clearly here in the 4 hours time frame that there's this break of structure to the upside. So all these previous highs were taken by this low. So this low move this caused this momentum that broke all these highs. So it took out all these highs, creating a new high. Okay, meaning this zone is a very strong demand zone. It's a very strong zone. Okay, we have an order block there. This is the order block that triggered that break of structure. So this is the order block here in our 4 hours time frame. So here is that order block. Okay, and then of course so having seen this particular break, so this becomes a valid zone we're expecting for price to come in the future. Okay, and then we saw something very significant happening here. So when price got to this place, it broke structure to the downside. So there was a break of structure to the downside here. So price broke structure to the downside, and then of course there was a retracement, and then price came in. Now we're expecting price to tap into this hour zone before it goes up, because looking at it clearly, let's come down to let's zoom in closely. Zooming in closely, you see that price has not tapped into our zone, rather we saw a seemingly equal lows. So these equal lows were created, okay, with multiple touches. These equal lows were created, which signifies liquidity, expecting that price in the future is going to come in. Okay, is expected that price in the future is going to come in and took out those low to tap into this zone and then go up. So that's actually what we expecting, but we have not seen that happen yet. Okay, so now getting into after this, we saw that there was a break of structure. There was a break of structure to the upside. So this high was broken. Okay, we saw this break of structure to the upside caused by this particular candle. So this particular candle caused that break. So if we take this like this, so this particular zone, it caused this break of structure. Okay, you see price retraced to that zone and then it bought. Okay, so when price bought, it got to this particular zone, and we saw that these highs were taken out. These previous highs, this high was taken out by this new high. Okay, that was liquidity. So the moment it took this liquidity, price pushed down massively to the downside. Okay, so now when price pushed down massively to the downside, it broke a previous low. Okay, so this break of structure, because it took out this previous low, so we have a break of structure here. Okay, and then after we saw that, after we saw this liquidity sweep. Okay, so after this liquidity sweep, okay, so we saw this liquidity sweep. Okay, we saw this liquidity sweep. This previous high was taken by this new high. Okay, if we go down to our 1 hour time frame, we are going to see that clearly. So we saw that this liquidity sweep here, right here, we saw this liquidity sweep. So this high, previous high, was taken by this high. Remember, we still have our main zone here that caused this downward movement. Okay, so this zone is still there. All right, So but when price got here, it took out this previous high. There was a liquidity sweep. Okay, we saw that there it was not a break of structure. Okay, because if it were to be a break of structure, it would have been a full candle closing above this previous high, but we did not see any full body candle closing above this previous high. Rather, we saw this rejection, multiple rejection. Okay, this liquidity sweep. So the moment we saw this, the next thing, we saw this liquidity sweep, and then price went down. So the next thing we did, we go to a lower time frame to look at for an entry here. Okay, so coming down to, we actually got this in the 15-minute time frame. So coming down to our 15-minute time frame, so this is what we saw. So this is what we saw in our 15-minute time frame. So in a 15-minute time frame, that sweep we got here. Now zooming into down to our 15-minute time frame, we saw that there was a break of structure, a change of character rather, a change of character. So this low was taken, this previous low was taken by this new low. Okay, after this low was taken, we saw the candle that trigger that break. Okay, this was this particular candle, this particular order block, little order block in this lower time frame. So this order block, which has an imbalance, okay, it actually sponsored this break. So after this break of structure, we waited for a retrace. So this retracement back to our zone is where we got our entry. So it was massive. Let me come down to back to our 1 hour time frame. So we'll see how we took that trade. And now this was the exit points. So we rode this trade down to here. We actually got out of the trade here, okay, but we see it still went down here. So we got out of the trade right here. So that was the first entry there. So we are done with this one. So let's go back to our 4 hours time frame. So now after we saw this, after we took this sell, okay, after we took this sell, so after taking this sell, we saw something very significant. Okay, we got out here. The reason why we got out of this trade here was because of looking here. We saw that there was this zone right here. You know, remember we have a break of structure here caused by this particular zone. Then there was another break of structure here to the upside. Okay, now this break of structure was caused by this particular zone. Okay, so for mark at this particular zone, okay, we have this other block in demand zone, meaning this particular zone which we exited this particular trade is a very, very significant zone, okay, which price will likely react to. Okay, so now let's come down to a 1 hour time frame. We saw what happened when we exited the sale. So we exited this sale right here, and then we saw something significant that the moment price got here, okay, so the moment price got into this particular zone, we saw that there was this break, there was this push movements, there was this movement upwards. If I come down to our 30-minute time frame, we're going to see something very important there. So coming down to our 30-minute time frame, we see that the moment price tapped into this hour zone, okay, the moment price tapped into this zone, we saw that there was a break of structure here, right here. So price tapped into this hour zone, it broke structure to the upside. So when it broke structure, okay, this break of structure, a full candle close above this previous high. So when we saw this break of structure, this is that zone that caused the break of structure. Okay, that's for entry, okay, in the 30-minute time frame. Now looking at it in the 30-minute time frame, so we saw that price came in, okay, and then we saw this particular pattern that was created here. Very, very significant pattern. So when price broke structure, it did this, it consolidated here, and then this acted as inducement. So price went up, it came in, it took out these lows, these seemingly equal lows that acted as liquidity inducement. So price came in, it took out those lows, tapped into this hour zone, and then it went up massively. Now discover that this particular zone in the 30 minutes time frame, we did not see price tap into it, but so it's actually reacted within this fair value gap. Okay, so price got in here and then it's moved massively to the upside. So let's go to a 1 hour time frame. So now we see that price, the moment price got into this place, it's moved massively. Okay, and this was our exit point. Okay, we exited the trade there. Now, another one, another significant move. Remember, seeing all this movement, these are all internal structure, because the real range of the market is this particular high. Okay, this particular high and this particular low. So this low and this high is actually the main range of the market. So haven't seen all this break of structure movement upward, we are expecting price to get into this zone to sell massively, taking out this liquidity here, tapping into our zone. Okay, tapping into our zone and probably buy, go up. So that's actually what we are looking at overall. Okay, now let's come back to our chart. So after we caught this particular buy to the upside, now we also saw another significant reaction in the market. So now after this big buy, massive buy, we saw that there was also another break of structure here. This is a 1 hour time frame. We saw this break of structure to the upside. Okay, now we are done with this, so let me take this out so that everything will be clear. So let me take this particular one out. So now we saw this break of structure to the upside caused by this. We saw this order block, this beautiful order block right here. This becomes a valid demand zone. Okay, we saw that this order block did not just break structure, it swept liquidity. It took out the previous low here, it swept that orders low, it broke structure to the upside. We saw this big rejection there. Okay, so we are expecting price to come in and tap it to buy now. So that's what we were expecting. Okay, now but before this buy, the moment we exceeded the previous buy here. Okay, let me undo this. Let me go back to that hour. So the moment we exited this particular buy here, if we come to our 4 hours time frame, if we come down to our 4 hours time frame, coming down to our 4 hours time frame. So after we exited this particular buy, okay, we discover that when we look here in these 4 hours, there is this demand zone here. Look at it here. There is this demand zone here, which we expected price to react to sell. Okay, so we saw that price did exactly that. It tapped into this particular zone and then sold. So how did we then catch the entry here, this sell movement? Okay, so we waited for price to tap into that zone. Okay, let's go to our 1 hour time frame. And remember, we had already marked, let me take this out now. Okay, remember, before we waited for price to tap into this zone, we already marked out this our demand zone here. Okay, caused by this candle, this order block, this upward movement. So we already mark here as a potential zone to buy. All right, so now the moment price gets into this order block that we saw in the 4 hours time frame, okay, price got into that zone. The moment price got into that zone, we went down to a lower time frame. So let's go to our 15-minute time frame. Okay, so coming down to our 15-minute time frame, so let's see what happened here in a 15-minute time frame. So now the moment price came here, so we saw this reaction. Now we'll see it clearly in the 10 minutes time frame. Now coming down to our 10 minutes time frame, so we'll see the reaction was so clear. Yeah, it was so clear. Okay, so this is that zone. So price tapping, we saw a break of structure to the downside. So this was a break of structure to the downside caused by this break of structure. That's a change of character caused by this particular order block here. So price broke structure, and we saw that price retraced to that particular zone. So the moment price retraced to that zone, we took our sell and our stop loss was above. So coming back to our 1 hour time frame, so we saw how the market price moved massively. It moved massively. We exited the trade here where we had this our previous demand zone that we expected price to come and tap into buy. So we waited here. So the moment price got into this zone, we exited the trade, and then we now waited for our buy. Okay, so we're just following the market structure. That's what we were doing here. Okay, so we're just taking advantage of the market. Okay, when it buys, we buy. When it sells, we sell. But we are not just doing that blindly. We are actually doing that strategically, following what price is actually doing. Okay, so now price came in and tapped into our demand zone. So the next thing we did, we waited for our entry. So price tapped into our zone. Now, so the moment price tapped into this hour zone, so the next thing we did, we waited for a break of structure. Okay, so price came in, it tapped into our zone, it created this high, a retrace, and then we saw this break of structure to the upside. So we saw this break of structure caused by this particular zone right here. Okay, by this particular zone, this zone right here. So if I take this out, we discover that in this 1 hour, there's this other block here that lies here. You getting? So this is the other block there. So price came in, waited for price to tap in here for us to sell. Okay, so price, after this break of structure caused by this particular zone, so price came in, tap into our zone. So the moment price tap into our zone, we came down to a lower time frame to look at for our entry. Okay, let's come down to a 15-minute time frame if we would have gotten any entry. All right, so 15-minute time frame, this wasn't clear, so let's go to our 10 minutes time frame. Now coming down to our 10 minutes time frame, we saw everything was everything was clear here. Now everything was clear here. We saw what actually happened here. Okay, let's go back to our 15-minute time frame. Sorry. Okay, so coming back to our 15-minute time frame, we saw that there was this break of structure to the upside, which price broke structure to the upside, now created this particular zone. So we saw that all these lows were taken, considered as liquidity, and price came in and tapped into our zone. The moment price tapped into our zone, this is where we took this particular buy. Okay, this is where we took this particular buy, we bought, and then we exited the trade here in this previous high. Okay, so we exited the trade there. Now we would have waited for a sale to sell here. See, this particular zone was violated. Okay, we waited for a sale here, but it was violated because remember, this is our main supply zone that we are looking at to sell in the future. This is the main zone. So when price got into this place, it retraced as if it wants to sell, but it went up massively, taking out all these previous highs. So all these previous high became liquidity. Okay, became liquidity because this zone, if we zoom into okay, so this particular zone, rather, if we zoom in, if we look at it closely, we discover that there's another block here that was not mitigated, another block in the 1 hour time frame. Okay, which is our main supply zone lying there. So price came in now. So when price came in here, it took out all this high. They acted as liquidity, okay, as inducement, and then price tapped into our main zone. So price tapped into that zone. So we waited for a confirmation for us to take that trade. So this is our 1 hour time frame. So price tapped into our zone successfully. So the next thing we did, we go to a lower time frame. Okay, so now let's come down to our 15 minutes. Let's see how we took this particular entry. We are currently in this trade. So this trade is actually moving currently. Let's see, it's moving currently. This is it. We are already taking this trade, so we entered it. So this trade is moving currently. Okay, let's go back to our chart. So now the moment price tap into our zone, so what did we wait for? We saw that there was this a break of structure to the downside. Okay, this break of structure, that's change of character to the downside, and this is the zone that caused that change of character. So we waited for price to tap into that particular zone. So price tap into that zone, we sold. So this is how we took this sale. So we are expecting this particular sale to continue. Okay, we're expecting this particular sale to continue. We are looking at exiting the trade here, but we are looking at it following the price action, where it could sell down to this our zone we're anticipating in the future. It could sell down here and then before it goes up, or it could sell and stop here. This is actually my first TP. Okay, so it could sell, get to this zone, and then it might retrace and then continue buy. Because if we come to our daily time frame, we discover that there's a lot of activity. There's a lot of we saw this all these highs, all this rejection up here. There's a lot of rejection up here, which price might actually um uh, take out. There's this equal high, so price might actually just retrace here and then took out all this high to create a new high to continue buying. Okay, that could happen, but whichever way, let's keep watching. Okay, so we are currently in this particular trade. Okay, so we are currently selling. Expecting to exit at this particular point, or of course overall wait for it to get done here. So that's that for that, guys. So ensure you go through our video, watch it over and over again, and if you have any question, please type it at the comment section. Yes, type it at the comment section. And then also, when you check the comment section, you're going to see our the link to our telegram channel, where I post a free signal for our trading community. So till we meet you again, so we'll see you in our next video. Bye for now.